Hello, everyone, and welcome to another episode of the Ontario Mortgage and Real Estate Insights podcast. I am your host, Steve Hamilton. In today's episode, we are diving deep into some pressing issues affecting the real estate market in Ontario. Specifically, we will be discussing the alarming rise in mortgage delinquency rates in the province. As residents throughout Ontario struggle to keep pace with the cost of living, new standards for mortgage delinquency have emerged. A report published by Equifax this week revealed that on a national level, a staggering number of households are struggling to find a foothold when it comes to paying their bills. Credit card debt and mortgage delinquency are at an all-time high across Canada, but the situation is particularly dire in Ontario. According to the report by Equifax, over 3,000 mortgages in Ontario are in a state of severe delinquency. In total, the delinquent payments amount to a little over $1 billion, which, on paper, showcases a roughly 66% increase compared to the standard in the province around this time last year. That is a significant jump and a clear indicator of the financial stress many residents are under. Rebecca Oakes, Vice President of Advanced Analytics at Equifax Canada, provided some context for these troubling numbers. She said, "Inflation is stabilizing and interest rates are starting to reduce, which is good news for many consumers. Unfortunately, rising unemployment has offset some of the positives and is driving increased financial stress. As a byproduct of this hostile environment for homeowners, Equifax's study indicated that, in tandem with rising delinquency rates, young would-be homeowners in Ontario are choosing to not leave the nest." Oakes explained, "The economic conditions we're seeing today may be leading many young people to stay at home longer. With fewer job opportunities, soaring rent prices, high housing prices, and the high cost of living, young Canadians are increasingly relying on the support of their parents and grandparents." Supplemental data in the report further emphasizes this trend. Nearly 1 in 3 Canadian households, almost 30%, includes adult children living with their parents. In Ontario, this trend is even more prevalent, as roughly 33% of provincial households sustain multiple generations all in one home. This report paints a vivid picture of the financial challenges many Ontarians are facing today. From rising mortgage delinquency rates to young adults staying at home longer, the economic landscape is shifting in ways that affect us all. For more information on this report, you can visit Equifax's official website. Stay tuned as we continue to explore more developments in the real estate market. Now, let us turn our attention to another significant development in the Ontario real estate market. The Toronto Regional Real Estate Board, or TRREB, has seen a year-over-year decline in its membership for the first time since 2016. This is a noteworthy event, given TREB's status as the largest real estate board in Canada. According to recent data, TRREB memberships declined by 1,363 year-over-year this July, bringing the total number of members down to 73,315. Scott Ingram, a TRREB member and chartered accountant, highlighted this unusual drop in a tweet last week. When contacted for comment, TRREB stated that it does not share membership trends with the public. Ingram believes there are 2 primary factors behind this decline. First, the market conditions are far less favorable than they were during the pandemic highs. Home sales in Toronto and the Greater Toronto Area have slowed significantly. For instance, this July saw 5,391 home sales in Toronto, a stark contrast to the 15,652 sales recorded in March 2021. Prices have also edged down, with the average Toronto home costing $1.1 million as of July 2024, compared to just over $1.3 million in February 2022. Due to these market conditions, being a realtor is not as lucrative as it was 2 or 3 years ago. This is especially true for part-time or occasional realtors who find it hard to justify the various membership fees when sales are fewer and far between. Ingram also pointed out that the Ontario Real Estate Association, or OREA, introduced mandatory health insurance for its members in January. The Ontario Realtor Wellness Program adds $660 to the already substantial annual fees that realtors must pay. This additional cost is another deterrent for those considering renewing their membership or entering the industry. It is essential to note that a TRREB membership offers valuable resources for active realtors, such as access to the multiple listing service, buyer registry service, market reports, and other crucial data. However, for those who do not sell a single home over the course of a year, these resources might not justify the cost. Steve TRREB, a Toronto broker and chief operating officer of RE Max Hallmark Group of companies, echoed Ingram's sentiments. He noted that over 80% of realtors conduct fewer than 5 transactions a year. The increasingly volatile market conditions make it even harder for them to close deals, leading to reduced income and driving many agents to leave the industry due to personal economic pressures. TRREB also highlighted that the industry is undergoing significant changes. Technological advancements and online platforms have fundamentally altered how real estate transactions are conducted. Buyers and sellers are increasingly relying on digital tools, making it challenging for some realtors to compete, particularly those who have not adapted to these new technologies. Moreover, the recent introduction of the Trust in Real Estate Services Act, or TRESA, in Ontario, has added layers of regulatory and compliance complexities. These stricter rules bring a higher level of risk, which has led some agents to leave the field. TRREB attributes this to the evolving behavior of consumers, who are now more informed and self-reliant, often conducting their own research. Many agents struggle to clearly articulate their value proposition or justify their services, largely due to a lack of comprehensive knowledge in various areas such as the economic landscape, contract law, and customer needs. In summary, the decline in TRREB membership is a reflection of broader trends affecting the real estate industry. Market conditions, increased fees, and evolving industry standards are all contributing factors. While the reduction in active realtors may continue, those who can adapt to these changes will likely continue to find success. That wraps up today's episode of the Ontario Mortgage and Real Estate Insights podcast. I hope you found this information useful and insightful. Thank you for tuning in, and I look forward to having you join me in the next episode. Until then, take care and stay informed.